Hi everyone, welcome back to Corporate Decoder. Today we're diving into a filing from the United States Brent oil fund, and let me tell you, it's less about striking oil and more about trying not to strike out financially. I'm only kidding, but it gets complicated. We'll break down where their money is coming from and where it's going without getting lost in the financial jargon. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below, where you can discuss all things finance and investing, or just chat about the complexities in this report. This is an 8K filing, a kind of quick update that companies are required to give to investors. It is to keep everyone in the loop about important happenings. This particular filing is about their monthly account statement. The report is for May 2025 and follows a specific rule by the Commodity Exchange Act that requires the firm to deliver a statement of income loss and a statement of changes in net asset value. Basically, it's like a financial health check. We are seeing how much money did they make or lose. We can find a copy of the monthly account statement on the registrant's website or in Exhibit 99.1 of this report. This is important since Exhibit 99.1 contained the actual numbers and is the most interesting piece. Now let's switch gears and look at financials. First, let's look at the statement of income, which is basically a summary of how much money the fund earned or lost. The big takeaway here is the net investment loss. The net investment loss was about $79 million. This means that after all the earnings from investments were added up and all the expenses were subtracted, the fund ended up losing money. Not a great sign, but let's keep digging. One of the biggest factors here, and by far the largest number in the income statement, is a realized gain on futures contracts of about $45.8 million. What that means is that the fund made money from trading futures contracts. Futures contracts are agreements to buy or sell something at a set price in the future. SOX team, however, it did not quite offset unrealized loss. The biggest loss came from unrealized loss on futures contracts, clocking in at negative $64.4 million. This is the flip side of the realized gain. An unrealized loss means that the value of futures contracts the fund holds has gone down, but they haven't sold them yet. They are only on paper for now. After we deduct all expenses, we are left with the total net investment loss of almost 18 million Alatur. After looking at the income statement, the reason for concern is clear. The combination of unrealized losses and other expenses outweighed the gains. Alright, let's proceed to the statement of changes in net asset value. This statement shows how the fund's net asset value, NAV, which is essentially the value of all its assets minus its liabilities, has changed over the month. Again, we see the almost 18 million net investment loss we calculated before. A loss like this directly reduces the fund's net asset value. Ouch! There's also net decrease from capital share transactions of about 10.7 million. This means that more money has been taken out of the fund by investors selling their shares than has been put in by investors buying new shares. This could be a sign that investors are losing confidence in the fund, or it could just be normal market fluctuations. The final and probably most important line item tells us that the net asset value at the end of period is around 257.5 million. So what's the story here? The fund took a pretty big hit in May 2025, mostly because of losses on futures contracts. Even though they made some money on these contracts, the losses outweighed the gains. And also more investors are selling their shares than buying new ones. The net asset value of the fund decreased. Overall, it wasn't a great month for the United States Brent oil fund, but let's take a step back and assess where they are at a high level. What does it all mean? First, we have to understand that the United States Brent oil fund is designed to track the price of Brent crude oil. This means that its performance is closely tied to the oil market, which can be very unpredictable. We can definitely say that a big risk for this fund is the complex world of futures contracts. The fund's gains and losses heavily depend on how well they predict the oil prices. In May, they lost 64 million on futures contracts. Also, because the fund's performance depends on futures contracts, changes in regulations and market conditions can suddenly impact the investments. Now let's assess the current position. The fund is not in some near danger, but clearly it's facing some stiff headwinds. The loss of almost 18 million and the decrease in net asset value are cause for concern. They depend so heavily on accurately playing the futures markets that it leaves it vulnerable to unpredictable losses. Keep in my mind that this is only a 1 month report, so it is not a full picture. We still need to watch how the fund navigates those waters in the coming months to get a full assessment. And keep in my mind that this is only a 1 month report, so it's not a full picture. We still need to watch how the fund navigates those waters in the coming months to get a full assessment. Alright, that's our breakdown of this oil fund's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. And don't forget to check out the Discord in the description. It's a great community to get help and additional resources. Thanks for watching. See you next time.